In today's video, we're diving into why Carnival, Shopify, and Mercado Libre are hot buys right now. So before we kick things off, if you find value in this video, please smash that like button and subscribe to our channel for weekly updates. Now, let's get started. The bull market is charging ahead, with the S&P 500 index up a whopping 38% since the end of 2022. While tech stocks have been leading the charge, some beaten down names in e-commerce and travel are making a strong comeback. Today we're talking about Carnival, Shopify, and Mercado Libre, and why these stocks should be on your radar. First up, we've got Carnival, ticker CCL. Now, we all know Carnival as the world's largest cruise line, but it's been a rocky ride for them post-pandemic. The stock crashed during COVID, and investors have been wary about its recovery due to the massive debt and shareholder dilution. Plus, the cruise industry is risky. Economic downturns, black swan events, and natural disasters can all impact it heavily. But here's the kicker. June could be a prime buying opportunity for Carnival stock. We're entering peak travel season, and recent reports from airlines and online travel agencies like Booking Holdings show that travel demand is on the rise. U.S. airlines are predicting record summer travel, up 6.3% from last year, which signals a strong recovery. What do you think about the travel industry's recovery? Do you see it impacting Carnival stock positively? Keep an eye on the Federal Reserve's rate-setting meeting later this month. If there's any indication of lowering interest rates, Carnival's stock could get a nice boost. Lower rates would reduce their variable debt costs and make it easier to refinance fixed-rate borrowings. Plus, we'll get to see their second quarter earnings soon, and Carnival has been showing strong momentum with record revenue and bookings. They've also been beating estimates in recent quarters, so a strong earnings report could really drive the stock higher. Despite being down 15% from its 52-week high, Carnival is positioned to benefit from a strong travel season and favorable economic conditions. This top travel stock could finish June on a high note. Now let's delve deeper into Carnival's operations and why it's a resilient pick. Carnival Corporation operates a fleet of over 100 vessels across multiple brands, including Carnival Cruise Line, Princess Cruises, and Holland America Line. These brands cater to different segments of the market, from budget-conscious travelers to luxury seekers, giving Carnival a diversified revenue stream. The company has been focusing on enhancing the onboard experience to attract more customers. This includes new ship builds with state-of-the-art amenities, upgraded dining options, and exclusive entertainment. Additionally, Carnival has implemented stringent health and safety protocols to reassure passengers post-pandemic. Carnival's financial health has been a concern, but the company has been proactive in managing its debt. They've successfully negotiated extensions and refinancings, ensuring liquidity remains strong. As travel demand continues to recover, Carnival's revenue streams are expected to stabilize and grow, reducing the debt burden over time. Another point to consider is Carnival's environmental initiatives. The company is investing in more sustainable practices, such as using cleaner fuels and implementing waste reduction programs on its ships. These efforts not only help protect the environment, but also enhance the brand's appeal to eco-conscious travelers. Next, let's talk Shopify, ticker SHOP. Shopify is a powerhouse in the e-commerce world, helping millions of merchants across 175 countries set up online storefronts. It's a solid business model that generates recurring revenue through platform subscriptions and other services like shipping labels, the Shopify App Store, and payment processing. What's key here is that Shopify shares in the success of its merchant customers, creating a win-win situation. Shopify's growth has been explosive. Annual revenue jumped from $389 million in 2016 to over $7 billion in 2023. It continues to grow at double-digit rates thanks to the massive global opportunity. There are roughly 400 million small and medium-sized businesses worldwide, which gives Shopify a huge market to tap into. Innovation is driving Shopify forward. They're integrating artificial intelligence into their services to help merchants make data-driven decisions, which could be a game-changer for small businesses. Shopify is also attracting larger enterprises, with their business-to-business gross merchandise volume more than doubling year over year in the first quarter. Now, even though the stock is up 76% since the end of 2022, it's still down 66% from its previous high. This makes it an attractive buy at a fair price, considering its growth potential and strong business fundamentals. To further illustrate Shopify's potential, consider its strategic moves. Shopify has been continuously expanding its ecosystem with new services like Shopify Capital, which provides funding to merchants to help grow their businesses. This not only aids in merchant growth, but also enhances Shopify's revenue through interest and fees. Additionally, Shopify's fulfillment network is a critical component of its growth strategy. By building a robust logistics and fulfillment network, Shopify aims to provide Amazon-like delivery speeds for its merchants. This is a huge advantage, especially for smaller businesses that cannot afford to build their own logistics infrastructure. Shopify's commitment to innovation is also evident in its focus on augmented reality, AR, and virtual reality, VR, shopping experiences. These technologies are becoming increasingly important trend as consumers look for more immersive online shopping experiences. By integrating AR and VR into its platform, Shopify is staying ahead of the curve and providing its merchants with cutting-edge tools to attract and retain customers. Another key aspect of Shopify's strategy is its partnership ecosystem. Shopify has built a robust network of partners, including app developers, web designers, and marketing experts, who provide additional value to its merchants. This ecosystem not only enhances the functionality of Shopify's platform, but also helps merchants succeed by giving them access to a wide range of tools and services. But before we proceed, here's a quick question for you. Do you think Shopify's stock can reclaim its previous highs? Or is it destined to stay undervalued? Finally, let's look at Mercado Libre, ticker MELI. This stock has been a market crusher over its lifetime, and it's still showing massive growth potential. Mercado Libre is the dominant e-commerce player in 18 Latin American markets, similar to how Amazon dominates in the US. They reported a 71% year-over-year increase in gross merchandise volume in the first quarter of 2024. Mercado Libre benefits from a flywheel effect. Continuous investments in logistics and delivery capabilities lead to faster shipments, which boosts sales, loyalty, and scale. They've also launched a membership program akin to Amazon Prime, driving more engagement and repeat business. On the fintech front, Mercado Libre is making waves. They started with digital payments to help the underbanked population access their platform, and now they offer credit cards, loans, and more. Their fintech platform is growing rapidly, with monthly active users up 38% year-over-year to 49 million. Total payment volume surged 86%, and assets under management jumped 90%. Mercado Libre isn't stopping there. They recently applied for a bank license in Mexico, aiming to become the largest digital bank in the country. With a 94% revenue increase in the first quarter and rising profits, Mercado Libre is positioned to keep delivering impressive results. To further understand Mercado Libre's dominance, let's dive into its business model. Mercado Libre operates three main segments: marketplace, payments, Mercado Pago, and logistics, Mercado Envíos. Each segment supports the others, creating a robust and interconnected ecosystem. The marketplace segment is the core of Mercado Libre's operations. It connects buyers and sellers across Latin America, offering a wide range of products from electronics to fashion. The platform's user-friendly interface and extensive reach make it the go-to choice for online shopping in the region. Mercado Pago, the fintech arm, is a crucial growth driver. Initially developed to facilitate transactions on the Mercado Libre platform, Mercado Pago has expanded to become a standalone digital wallet and payment solution. It allows users to make online and offline payments, access credit, and manage their finances. This segment is crucial in a region where a significant portion of the population remains unbanked or underbanked. Mercado Envíos, the logistics segment, ensures fast and reliable delivery of products sold on the marketplace. By investing in warehouses, distribution centers, and a fleet of delivery vehicles, Mercado Libre has created a logistics network that rivals global giants like Amazon. This infrastructure not only enhances the shopping experience, but also attracts more sellers to the platform, knowing they can rely on efficient delivery services. Mercado Libre's commitment to innovation is also noteworthy. The company continuously invests in new technologies and services to enhance its platform. For example, they've been exploring the use of artificial intelligence to improve search results and personalized recommendations, making the shopping experience more intuitive and engaging for users. Let's take a quick look at the numbers. Carnival is trading at $16.34 with a market cap of $21 billion and a revenue of $21.59 billion, boasting a gross margin of 24.18%. Shopify is priced at CA $87.82, has a market cap of CA $113 billion, and generates CA $9.53 billion in revenue, with an impressive gross margin of 51.03%. Lastly, Mercado Libre is at $1,580, with a market cap of $80 billion and revenue of $14.47 billion and a solid gross margin of 48.79%. These figures highlight the robust financial positions and growth potential of each company, making them strong contenders for your investment portfolio. To sum up, the bull market is presenting great opportunities, and Carnival, Shopify, and Mercado Libre are stocks you should definitely consider. Remember, always do your own research and consult with a financial advisor before making any investment decisions. Before we wrap up, I'd love to hear from you. Which of these stocks, Carnival, Shopify, or Mercado Libre, do you think has the most potential for growth this year? Let's discuss in the comments. Thank you for tuning in to Simple Investing Secrets. If you enjoyed this video, please like and subscribe for more insightful content. And remember, this video is for informational purposes only and is not financial advice. And join our community by tapping that subscribe button and clicking the bell notification. See you next time.